Step onto any retail trading floor, scroll through a late-night Reddit thread, or watch the frantic commentary on modern social platforms, and you will find advanced micro devices trading under a heavy shadow of misunderstanding. The ticker flashes across screens, whipsawing through volatile intraday ranges, while market commentators reduce the entire narrative to a single lazy binary. Is AMD managing to steal a sliver of artificial intelligence market share from the undisputed giant, or are they destined to remain an eternal runner-up? Financial television anchors breathlessly track weekly moves, treating the stock like a high-beta momentum token, tethered entirely to the latest hyperscaler CapEx headline or quarterly earnings whisper. But this superficial financial media framing completely misses the underlying structural reality. While retail investors obsess over headline-grabbing GPU unit shipments and near-term margin compressions, they are entirely blind to the deep physics bottlenecks redefining modern high-performance computing. We have officially slammed into the walls of traditional silicon scaling. Interconnect latency, thermal density limits, and the brutal physics of moving terabits of data across massive server clusters are no longer secondary engineering hurdles. They are the primary governors of global economic power. The market continues to price AMD as a traditional commodity chip designer, a cyclical provider of x86 processors and graphics cards that rises and falls with the consumer PC refresh cycle and enterprise server demand. Yet this view ignores the masterclass in architectural engineering that Lisa Su and her team have quietly executed over the past decade. The real battleground in enterprise computing is no longer just raw arithmetic logic unit counts. It is system-level co-design. When a trillion-dollar cloud service provider builds out a massive AI training cluster, they are not just buying individual processors, they are architecting a sprawling, interconnected supercomputer where energy efficiency, memory bandwidth, and packaging topology dictate operational profitability. AMD's true value proposition does not lie in matching a competitor's peak benchmark on a single slide. It lies in a revolutionary modular chiplet architecture, heterogeneous computing mastery, and strategic vertical integration that spans high-performance CPUs, advanced GPUs, adaptive FPGAs, and networking fabric. The market mispricing stems from a profound systemic failure to comprehend that AMD has transformed from a scrappy underdog fighting for survival into a diversified infrastructure gatekeeper of the modern digital economy. While the crowd reacts emotionally to every short-term macro tremor, smart capital is quietly positioning around a company whose silicon is quietly anchoring the backbone of the next technological revolution. Before we break down the operational machinery fueling this long-term thesis, let's check in on where you stand. How are you currently playing the volatility in AMD, and are you actively accumulating shares during these pullbacks, or are you waiting on the sidelines for a clearer technical breakout? To appreciate where advanced micro devices is heading, one must confront its turbulent historical context and recognize the sheer audacity of its corporate turnaround. For decades, AMD was trapped in a grueling, capital-intensive war of attrition against Intel, burdened with heavy debt loads, inferior manufacturing nodes, and a legacy reputation as a budget alternative for price-sensitive consumers. The old framing of the company was simple: a distant number two in desktop CPUs that bled cash during industry downturns and struggled to maintain relevance in enterprise data centers. The pivot away from owning capital-intensive fabrication plants spun off into global foundries was seen by short-sighted analysts at the time as a sign of weakness. Instead, it was a stroke of strategic genius that liberated AMD to focus entirely on advanced chip design, software ecosystems, and architectural innovation. Today, that foundational evolution has manifested into a diversified, multi-pillar powerhouse operating across four distinct, high-margin segments: the data center segment, This is the crown jewel of the modern enterprise, anchored by the EPYC server CPU lineup and the Instinct accelerator series. EPYC has spent years methodically eating away at legacy enterprise server footprints, offering unmatched core density, power efficiency, and total cost of ownership advantages that hyperscalers cannot ignore. Coupled with the rapid scaling of their AI accelerators, the data center division represents the primary engine driving top-line revenue expansion and structural margin accretion. The client segment, far from the stagnant PC markets of the past, AMD's Ryzen processor family has redefined consumer and commercial computing. By introducing cutting-edge neural processing units, or NPUs, directly onto the silicon die, AMD has positioned itself at the forefront of the AI PC transition, capturing high-end enthusiast loyalty and lucrative enterprise fleet deployments. The gaming segment. While traditional discrete graphics cyclicality can introduce short-term revenue lumpiness, AMD's custom silicon deep roots remain unmatched, powering next-generation gaming consoles alongside high-performance Radeon graphics architectures. This segment provides a steady, cash-generative baseline that funds heavy R&D across core computing initiatives. The embedded segment. Bolstered by the transformative acquisition of Xilinx, AMD unlocked an expansive portfolio of adaptive FPGAs, system-on-chips, and intelligent edge computing solutions. This segment injects high-margin, sticky recurring revenue streams into the business model, insulating AMD from pure consumer cyclicality by embedding its technology deep into aerospace, defense, automotive, industrial automation, and telecommunications infrastructure. This modern operational matrix bears zero resemblance to the commoditized hardware vendor of the past. It is a diversified technological toll booth sitting squarely across the most critical compute workloads of the 21st century. Looking out over the multi-year horizon, the growth catalysts lining up for advanced micro-devices are both profound and structural. The exponential scaling of generative AI, large language model training, and real-time inference workloads has created an insatiable generational demand for high-performance compute infrastructure. As mega-cap tech spenders, hyperscale cloud giants, and sovereign AI initiatives alike pour hundreds of billions of dollars into capital expenditures, the global market requires a resilient, multi-vendor supply chain. No single entity can satisfy the sheer volume of silicon required by the modern data center. This reality cements AMD's gatekeeper positioning as the primary viable alternative in accelerated computing, ensuring multi-billion-dollar revenue visibility well into the future. Furthermore, the ongoing maturation of the ROCm software ecosystem is systematically dismantling the software moat that once protected legacy industry monopolies. As developers demand open standards programming models and hardware choice, AMD's software stack is reaching critical performance parity, lowering adoption friction for enterprise clients. Beyond artificial intelligence, the secular rollout of edge computing, 5G infrastructure, and adaptive industrial automation ensures that the Xilinx integration will continue to yield massive cross-selling synergies and revenue diversification. However, navigating these hyper-growth landscape is not without significant risks. Supply chain vulnerabilities remain an ever-present reality. AMD relies heavily on leading-edge foundry partners like TSMC for wafer fabrication and advanced packaging capacities. Any geopolitical friction across the Taiwan Strait, regional energy constraints, or manufacturing yield bottlenecks at advanced nodes could immediately pinch product delivery schedules. Additionally, capital expenditure cycles among mega-cap tech spenders are inherently cyclical. Should macroeconomic headwinds force cloud providers to pause or rationalize their aggressive data center build-outs, temporary demand air pockets could trigger sharp downward earnings revisions. Geopolitical trade restrictions and evolving export controls on high-performance semiconductors to key international markets also introduce regulatory overhangs that management must deftly navigate.
Ultimately, navigating these near-term risks requires looking far past the short-term price noise that dominates financial media headlines. Markets are notoriously short-sighted, prone to overreacting to individual quarterly guidance fluctuations while completely losing sight of structural multi-year technological shifts. Advanced micro devices is not merely trading on the outcome of the next earnings report, it is engineering the foundational silicon infrastructure that powers the future of global intelligence. For the disciplined investor willing to look past the intraday turbulence, the structural thesis remains overwhelmingly clear. Patience, perspective, and an acute understanding of deep hardware engineering will always separate true wealth creation from fleeting market speculation.